Well, welcome everyone. Welcome to our panel on auditing for investment advisors. Its long name is the third line of defense, the intersection of the audit and compliance function. So we welcome you today, and we hope that you find this panel to be helpful for you. We certainly have an excellent list of experts who can help us with it. I'm going to have each of them introduce themselves a bit here, because I can tell you, and I sort of will, but it's good for you to hear their voices too, and so that if we get to someone immediately, they don't seem left behind in the process here. So let's see, there we go. Oh, nope, that went too far. There we go. Anyway, Jack Thomas, why don't we start with you, and then we'll go to Steve and Dan Goelzer, and then back to me, and we'll go then to our outline is what we're going to talk about. So Jack, why don't you say who you are and where you're from and whatever else you want to tell them.
Sure. Thanks, Paul. Really appreciate the chance to be with you all. This is wonderful for me to be a part of this group. And Paul, you and I have talked for a while about really how the risk and compliance and audit functions work together, overlap. We have a number of folks across those various disciplines with us today. And of course, we have Dan with us and Steve to share with us as well their perspectives. And so for me, in the various roles that I've been throughout my career, have sat in the various lines back when before we had lines of defense, right? But now when we talk about the business in the first line, and then the control functions in the second line, and of course, internal audit in the third line. So having sat in all of those chairs and being in returning really to back to the future to internal audit. And so glad to share the audit perspective, the internal audit perspective today. And Paul, appreciate the chance for us to do that and add value to our participants today. Thanks.
Yep. Hello, everyone. I'm Steve Perazzoli. I'm a partner at PricewaterhouseCoopers in our asset management group based in New York. I specialize in mutual funds and other related products, and I'm happy to share the external audit perspective to complement John's internal audit perspective.
Good afternoon, everyone. Thanks for joining our session. My name is Dan Goelzer. I'm a retired partner for the law firm Baker McKenzie, but probably more relevant to our panel here today, I was one of the original members of the Public Company Accounting Oversight Board and served as the board's acting chair from 2009 to 2011. So we're going to talk a little bit about the PCAOB and how it might affect your work. I was also the general counsel of the SEC back in the dark ages of 1983 to 1990. Currently, I'm a member of the Sustainability Accounting Standards Board, SASB, and I hope we'll also have a little time to touch briefly on SASB's work and why that might be of interest to you.
Absolutely, it definitely will be. We've had panels on ESG and other things, and hearing from you on that will be one of the highlights. So anyway, what we plan to talk about as far as the agenda goes, we'll be talking about audit practices, the SEC initiatives for auditors, auditing developments in investment advisory firms, the PCAOB in general, with lots of detail to be included. We're going to do a polling question, and you can answer that, but as you go to it, we also had another polling question in here as to what people are doing. But so we didn't have two polls exactly together. We made an analysis as to all of you when you signed up. There's signed up on at least when we made our assessment was 109 of you, and doing a compliance role of 69 people. So this roughly relates to almost percentages as well. Legal role, 5 of us. Internal auditors, 2 of us. Presidents, 2 of us. Management, 12, and unknown, 18. At least you didn't fill it out or didn't have one there. So we're happy to have each of you here. So there's the answer to the poll that you're sort of not taking. It's sort of a non-poll, but that's the answer to it. The polling question here says, does your firm currently engage external audit services such as financial statements audits, surprise custody audits, GIPS verification, or Anyway, SOX 1 or 2 reports. Yes or no? So if you can answer that, that would be good. Just I hope our voices are going well. Okay, so the results are there. Answer is yes, overwhelmingly. So we appreciate that. That gives us some idea. Very few no. So okay. Okay, let's go on then with our first audit practices. And Jack, do you want to kick us off with that?
Sure, Paul. Really appreciate that. Thanks. And so the first polling question gave us an idea. It really helps us to understand, and also in the role Steve has as part of the panel with us, get a perspective of how we all engage firms like Steve at Pricewaterhouse. And so really, if you look at the demographics that Paul outlined, it's not a surprise that in our firms in the investment advisor space that a number of us sit in the compliance chairs, and we think through over the years. It's been many now. It seems almost like yesterday, but when the compliance rule came into effect, and we have the 20647, and of course we have 38A1 on the mutual fund side, and really where the SEC wanted to build out and demand and require and expect and work through the compliance officers. And many of you indicated in the sign up that you're coming to this session from a compliance role. And so again, it's not a surprise that the title of this panel talks about how the audit roles and the compliance roles converge. And again, if you think through where we all sit in those various chairs at any given time, it does make a lot of sense, because the compliance rule expects, at least now many of us that sit in the compliance roles and have sat in those compliance chairs, require an annual approach. Well, many of us are doing regular work on an ongoing basis, a recurring basis, a continuous testing, monitoring, oversight role. If you think through how we interact with our firms on a regular basis, a daily basis. So while there may be an annual touch point, essentially an annual summary, an annual presentation to the board of the firm, we're around the firm on a regular basis. So if you think through what the audit role does, and so in the chair I have now, right? So we come in, test, monitor, oversee, sample, review, evaluate, provide our opinion. But we also do that very similarly to compliance. And so as part of what we want to share today and what we'll unpack with you in our session together is what we've done. And if those on the call with us today have participated in the audit directors working group, you'll be familiar with the fact that we don't really make a distinction when we get together to talk about who has an audit chair, who has a compliance chair, who's from a risk role, because they do converge. But really helps us, and we'll talk about in our session how we leverage those relationships, our understanding, our roles and responsibilities. And we're all fiduciaries. We're in the risk management business for our clients, ultimately as a fiduciary in their best interest. And of course, the best interest of our colleagues in the firm is to make sure that we leverage across those disciplines. So when someone such as Steve comes into the firm, he brings his colleagues with him, that he has the opportunity to work with us, leverage resources. The poll question talked about who engages external audit firms for financial work, for the I still say SAS 70. So, but the SOC 1 reports, the SOC 2 reports, Steve, you always correct me in the right standards that we're using at the time, right? So, is it the SSA 18? I think we're up to now. I'm getting better at that. So Steve can correct me, but but as we think through that work, and so the audit practices converge, we think about the compliance functions, and Steve will speak to, in the role he has, how when he, again, as I mentioned, comes into the firm, how it's helpful to have those various functions in place. Again, the reality is the more efficient than Steve and his colleagues are as they come into our firms, that there's obviously the reality of the numbers and and what that is. So there's a cost factor there, and there's also the opportunity for, I know, Steve, and you can speak to it when you come in and find issues or find questions. It's so helpful to have an advocate really for you and the firm, and to come in and do that. And so we'll look forward to your perspective on that. And you and I have talked about that together over the years, of course. But for me, when I think through, okay, now being, go ahead, Paul.
Can I interrupt just for a second? For two reasons. One, just as a reminder, things that we want to have this interactive, so pardon my interruption, but one of the other things about that a lot of the compliance people can learn from this is that part of compliance is monitoring, testing, and what I call deep testing. And so that's very similar to a lot of the things that you're doing here. But the thing I want to interject for is our CLE credit word, and that is the audit. So just audit, AUDIT. So that's it. Back to you, Jack.
Well, thanks, Paul. The CLEs and the CPEs are obviously very important. So the learning and our chance to interact today is important. But right, we want to take credit for all that hard work, and that's a great way, as we think about that, right, taking credit for all of our hard work. And so, as I work with my colleagues that have a compliance chair now, and I think through their program, their approach, we'll talk about that more as we head into the slides this afternoon. However, again, as we think about our audit practices and the role internal audit has, and so many shops, to be honest, may not have the luxury of an internal audit group to come around and help the process. And so that's really why it's important for us to understand together how the compliance function and the significant role they have, and the role in testing and monitoring and overseeing and being around the table. And we think through the SEC's expectations of our firm, right? The culture of compliance. And that always sits at the CCO's seat, and the SEC comes in, although, and works through the compliance officer, and then also works with management to understand, all right, ultimately at the top of the house, how are we establishing and setting and facilitating that culture of compliance? And what do we do in those control functions? What do we do in our compliance seat, in our audit seat, to provide that independent assessment, to be able to test and monitor, oversee, and provide that independent judgment internally to our firms? And Steve, I'll bring you into the discussion. And I know that one of the things, as Paul said, right, that deep dive testing, the sampling, looking at our best execution, looking at our brokerage activities, looking at our pricing activities, looking at the things that we are around every day, and our valuation practices, and we'll talk about that here, and you'll speak to that later. The things that we do internally, and how you can get a good sense whether it's to leverage that work, right? So if you come into specific testing, monitoring regimen by a compliance department that has a good independent reporting structure in place in the firm, in the entity, or internal audit that has that purely independent role, reporting into the board, reporting into senior management, where you can get a good sense of the control practices in the firm and get a good idea as to how the firm is functioning, the oversight roles in place, and really, to be honest, the level of work that then you have to perform when you come into the firm. So perhaps speak to that a little bit, and you and I can talk about that.
Sure. Okay. Thanks, John. And you've corrected me as much as I've corrected you over these years, so I appreciate that. So auditing during the pandemic, we thought the audience would be interested in what it was like to audit in these unique times. I would say there was a range of impact, from little to no impact to significant. I say little to no because it has been a trend that audits have been more remote, have been more electronic, information exchange. So there was certainly a percentage of the audits out there that had less of an impact. The points on this slide are to those where there was more significant of the impact. These are some of the key things that were considerations. And let me start with risk assessment, because I know the internal auditors are focused on this, just like the external auditors and just like the PCAOB. In a normal environment, you would start with risk assessment during your planning. But in the COVID environment, as things were happening real time throughout, their auditors needed to be flexible to evaluate the risks as they were happening. And what are the risks to the business that we're auditing? What are the implications if liquidity is driving issues with the ability to meet debt covenants and things of that nature? There was a lot of time spent on going concern considerations, a lot of use of experts and specialists, a lot of discussions with the regulators to talk about the viability of businesses a year out from the release of the financial statements. And then if you look at the changes, restructurings, layoffs, moving vast amount of people out of their normal work environments under the normal internal control processes and have them suddenly, and I mean within days, working from their home, auditors had to evaluate the impact to the operating environments, and do we need specific adjustments to our procedures to handle those changes in an effective and efficient way to get our audits done on time. If you think about some of the classic, if anyone in the audience are external auditors, inventories, walkthroughs, fixed asset testing, all of those things were hallmarks of being able to do that in person. That largely had to be taken remotely. There were live streaming setups, but honestly, a lot of that work was done using our phones, and it's a lot harder than you think. Think about inventories. We had to have our clients test run around their facilities whether they would get service, even get service everywhere we needed to be. We had to tell them when they reached their destinations, pivot your phone so that we can see landmarks, so that we know exactly where you are based on our expectations. We had to send them batteries to keep their phones charged. So there was just a lot of scrambling and workarounds that needed to be done in order to do that core testing. And then the last point, evidence in a digital form. Thankfully, the PCAOB has been out ahead of this. The firms have been out ahead of this. So we did already have policies and procedures to identify that the information we're receiving was from a valid person that we would expect. We do callback procedures. We do analysis of the information and all kinds of forensic tests to ensure that that information is what we'd expect. It wasn't tampered. So as I said, I go back to a range of impacts. At the end of the day, if you look at the data, there was really not a significant increase in delayed filings as a result of the pandemic. So the audits got done. We just needed to be creative, and hopefully the audience got a sense from my points as to some of the things that we had to do to address it. So, John, I think the next slide was you on some of the compliance considerations related to COVID.
Thanks, Steve. Perfect transition, and love to come back to some of those auditing during the pandemic, right? So I'm sure you have some great stories, and it's not a surprise. Just like you said, the firms are aware of it. The audit firms, the external audit firms are aware of it, and Dan will share right from the PCAOB perspective, and that perspective, it's not a surprise. Again, getting out ahead of it, trying to react to what we're doing. So obviously the SEC similarly and likewise issued the COVID-19 compliance risks and considerations. And so again, I'm sure all of us have read that, many of us have read that and stepped through as we're trying to do today and really think through. And a big part of the compliance conference every year is trying to learn and grow together, but also be prepared for, again, as a fiduciary, how we take care of our clients, but also, to be honest, how we prepare for exams, how we are functioning, operating as a firm. And so all of us in those control functions, and it's all of us on the call together. So it's the compliance officers that are together, the auditors that are together, whether it's folks like myself internally or Steve with us, really are functioning in a way to take care of our investors, our clients, our customers, and operate and function in their best interests, whether that's through disclosures, whether that's through as Steve said, some of those surprise verifications that you have to do remotely with the client with the phone. So again, we've really been, someone said the other day on a call, and they were the unprecedented times. I said, well, we've been doing this now for almost a year, coming up here in the next few weeks. So we're kind of there. I mean, so we've been doing it together, and all of us in it and trying to figure it out. So it's not new any longer. There are still some new things that come along. But as Steve said, I'm amazed how quickly we were able to pivot. And that's a word, right? So unprecedented, pivot, all these words that we use now, right? But how quickly we were able to really pivot those control structures, oversights, governance, framework to react to doing that at home. And so the reason that we put the compliance risks for considerations in there, again, the SEC outlines those topics. We think about the investors, and Steve alluded to it, the inventory, ensuring that the assets are available, the protection of the assets, the supervision of personnel. So the things that we need to do from an internal audit compliance perspective to be able, one, to support our colleagues and communities in these times, but also make sure, to be honest, the role that we have. So how do we oversee the traders that are functioning solely through a laptop, perhaps at home? And how do we make sure through the automated functions that we have that we're able to ensure that the valuations of those securities are accurate? Steve will touch on that here shortly, and we'll think through that. And how do then we serve the firm in the roles that we have so that management, our leaders, our senior folks have an appreciation for what's happening? I know for us in our public companies, right, so the demands placed upon the board of directors, but also in our advisor firms, the named officers to the firm that are filed in the ADV, the SEC comes in, walks that through very, very quickly, very easily, right? They're disclosed, they're public, they're available. So how are those individuals overseeing, managing the firm? And what do we do to make sure that's there? And how are our functions assisting not only the SEC, but when Steve and the folks come in, when our external audit firms come into our shop, how do they get a good sense as to if there's fraud going on? How do we help convey to the regulators that we have been able to move that structure to work from home? And so as you get a chance to read the risk alert, if you haven't read it, go through it. The SEC does a nice job talking about their expectations when they come in, but also considerations for us. And looking at that risk alert, a year back, right, and thinking through what we've learned together as an industry over the last year. And Steve, I'm sure that, right, so this time last year, early March last year, you would not have ever, if someone told you that you were going to do an inventory through your phone,
No.
I mean, you just said that's ridiculous.
Complete surprise.
Right, so we never have. So a year into this, right, we're able to do this conference together and learn and grow together, where it's either canceled because we can't travel, can't be there, but we're able to make it work, right? So the technology, exponential growth in the technology, and how we have to react to that and really understand it, thinking through the business continuity. How do we've been living a business continuity test. I've been in the whatever various chairs when you talk about business continuity, and everybody, drop their head and think through they have to do that. But we've lived it, right? And so the preparations, like the fire engine in the firehouse, right? You got to test it, make sure it runs, make sure it's ready, make sure it's prepared. You hope you never need it. And so we've been really reacting from a business continuity, a BRP program, making sure our people have access, making sure the bandwidth is appropriate, make sure we have the right laptops, the right technology to be able to function. And in the roles that we have, the significant roles we have, make sure we have the access to the right systems, the right drives, the right real-time monitoring if we're on the trading desk, keeping an eye on alerts, keeping an eye on the things that drive real market risk for our firms and how we do that. And that, Steve, will really dovetail right into when we talk about the valuation and we talk about those things and some of those changes. So help us understand what you see there and the perspective of the Rule 285.
Yeah, thanks, John. So as if all of that wasn't enough, the SEC released a very significant set of rules before the pandemic in December around good faith determination of fair value. Now, this is applicable for mutual funds most directly, and also business development companies. But for those in the audience that have non-regulated funds and products that they oversee, it's certainly the case that those governance structures look to SEC rules and mirror that as part of the best practice effort. So even if you're not in mutual funds, this is important. So this is the most comprehensive overhaul since the creation of the Act in the 70s. I would say a lot of the principles and concepts, which I will cover at a very high level because it is a long rule, are things that many leading firms have already done. And this is really just codifying it and adding some new requirements around record keepers. So some will say it's marginal, the impacted to adopt it. Others will have more, certainly, but I don't want to give the impression that these rules are coming out of left field and dropped on us. There's certainly a lot of background for it. So the compliance date will be 18 months after December 20, but because of the change in administration, there is the provision that the new administration can review these rules and make changes. I don't want to make a prediction as to whether there'll be any changes, but safe to say there is some runway before these rules have to be adopted. But the big headliner is, and this is no surprise, that the board of directors are ultimately responsible for the valuation of their assets, and they can have a valuation designee to perform that for them. And that designee should be someone who has a fiduciary duty or connection. So whether it's a portfolio manager or someone in that type of capabilities, that's certainly allowable. But if it is someone like the advisor, there should be a reasonable segregation of duties between the actual determination of the valuations and their role. So none of this is that shocking or change. But let's go into some of the details on the next slide. The rules outline a number of provisions periodically assessing and managing the identified valuation risks. There should be nothing set in stone here, but there should be a process and a policy to evaluate things as markets and conditions change, as they often do on a dime as a result of factors. We've had many cases, municipal crunches, liquidity crunches, and things like that. So the policies should be adaptive to that. There should be established fair valuation methodologies and what they're choosing, what their practices are, what they're going to use to framework, and that should be tested. Okay, no surprise there. And it's no surprise that the SEC didn't mandate particular testing, but they did talk about back testing, which is where you take a process where you take a valuation and then you compare it to a recent transaction after the fact. And that gives you some evidence as to how good the valuation was. And if it was off, why was it off? And do we need to change the approach? Monitor and evaluate pricing services, which will do a large degree of this. There needs to be a process to understand, have a degree of diligence, and to evaluate on a periodic basis all the pricing services that are feeding you thousands and tens of thousands of data on a daily basis. Board notification. So the designee now has to notify the board if there is a material valuation issue within 5 days. Okay. But they have up to 20 days, business days, to determine if there was an issue. And once they determine it was material, then they have 5 days to communicate that. The big discussion point here was the word material matter, not defined by the SEC. So clearly the industry was concerned about, are they going to hold me to a different standard than our own? So in the final release, the SEC did point to the existing NAV rules as one data point to help you. The penny per share, the 0.5%, those types of things are certainly something that can be part of your determination. And record keeping, supporting the fair valuations. You need to keep records to demonstrate that this was done. So I think at the end of the day, there's a lot of discussion about this issue. This was out there for a long time. In addition to the material issue, another big discussion point was the consideration that level 2 investments are fair valued under this rule. And I think the industry said, wait a minute, level 2, that's, most all fixed income assets are level 2 varied. So I don't want you, the SEC, to put me in a position where I have to have the same level of records for a level 2 bond that I have to do for a level 3 private equity investment. And the SEC in the final rule, relaxed that and addressed the industry concerns that they're not expecting that type of the same amount of documentation and diligence for level 2 as you do for level 3. But I mean, Paul, that's the rule. We have in your materials a PwC summary of that, very short read, and you can see what it's there. But at the end of the day, it's the board's responsibility. The board needs to be robust and needs to have good probing questions and needs to be engaged in their role as oversight of the valuation process. So a big rule for us, right when we needed it at this time. And we'll see how it plays out. So, key provision.
Thank you. Excellent. And thank you for the material. I can personally endorse the piece of material that we're talking about. It's very succinct and very helpful. So thank you for that. Our next slide here has to do with auditing developments in investment advisor firms. Jack, do you want to take us through that?
Sure, Paul, we'll get into that. And before I do that, I don't believe we currently have any questions from the audience. I know you mentioned that they're available to ask and that we do want to try to be as responsive as we can be as all of us are talking, but I'm not aware that you have any questions at the moment, right?
That's right. We just had it confirmed we don't. So if people want to write them.
Sure. Okay. Well, maybe some will come to the surface here. And again, I appreciate Steve's perspectives and his insights being around it. We're all living it, learning it together. I share with the team regularly that many times think back through circumstances such as 9/11, right? So we all live that together, of course, but really New York had it specifically. Or you think through the recent storms in Texas, or you think through the hurricanes that come in the South, or the big snowstorms that can cripple throughout the country that come, or the tornado alley that happens, and the things that occur from a natural disaster. And those things really are isolated to that specific geography, and we all may experience some downstream impacts from them, of course. But really, all of us being together in the pandemic, it's unique to each of us and our families and our health, but we're all in it. And so cities closed and folks are still working from home, and many of us will be home even for several more months, and we can talk about that at some point. But again, as Steve alluded to, very quickly pivot and deal with work from home and understand how to continue to be performing the integral roles that we did. Again, Steve talking about doing inventory. I'm having flashbacks to think through how that would happen, right? I'm thinking through vault counts, and we've done vault counts, right? And so how do we do that? Well, we're not going to the vault and we're not opening it and looking in there. So how do we provide some judgment? What we've had to do is use the access that we have through the vault logs, the location codes, look at the system, try to ensure is it reasonable as to the ins and outs that have occurred, and again, try to provide a risk-based, reasonable effort, reasonable approach to figure it out. We're not putting our folks on a plane and we're not trying to get them on location, much like we've talked about. So, for us, it's all right, what do those current practices relate to? And so that's really through the lens and the filter of the last year. And so we talked a little bit about some of those virtual audits. I know what we've had to do is ensure, okay, so do we have the right access? And really what it's done is just like the technology to enable this conference to happen, our access to what we use with data and how I'm very thankful for some very smart, intelligent folks on my team that work with I love the Tableau dashboards, love to chew on the data, love to get it together, love to put it together, and then send it to me, which is great. Then I get to see the red, amber, green, and I get to see the trends, and then we get to work together on it. But they love the behind the scenes, which is fabulous. And so that's really been the challenge for us when we think through how to use data that we have to evaluate and understand what the anomalies are. One that's helpful for us. So if you have 15,000 items, you're able to try to at least provide some judgment, oversight, viewpoint of 15,000, as opposed to going in and pulling a sample of 30 items to understand what's there. So for us, it's been really challenging ourselves on the data that we have available to us. How can we package that, pull it into reporting, evaluate the system codes, evaluate a standard, evaluate those expectations, work with our colleagues in the business to say, all right, so if we're bringing in trust accounts, if we're bringing in investment management accounts, investment management agreements, how do we how do we get some perspective and draw a conclusion on what items do we want to sample and look at, but also what's the broader view of the process. And so for us, trying to figure out how we can understand the process. And so if we come into our regulated investment advisors, we talked about it earlier, we think of the compliance program rule. That's in the front and center. It's been with us now. Remind me, Paul, is that a 2004? That's the date that sticks in my head, but you may have that date somewhere. But I think that was it. So you think through, and it's been with us for a while. And so really then for us, and when I come in and our team comes in and there's a CCO in place and they're in the chair and they have a team and they have a program and they are representing to the SEC that they have the ability to evaluate, test, monitor, oversee, ensure that the policies and procedures are reasonably designed to ensure compliance with the securities laws, right? So we've all read that, heard that, written that down, put that in our policies, procedures, opinions, and memos. And so for us, the relationship with compliance is so important because it is a program in place. And so we don't need to recreate the wheel. We don't need to go back in and ask the very same questions. And so we can step back and evaluate the forest, if you will, and understand and evaluate the tests. Look at it through a documentation lens. And I'll be honest that sometimes in the compliance framework that's around the firms, setting up the documentation to substantiate all the hard work may not always be at the forefront. It may not always be that's right on the top because so many things are going and moving and committees that are happening and the valuations and the firms moving in a volatile market. So for us, sometimes it's able to pause and encourage and provide some feedback that, all right, here's a way, for instance, to represent all the hard work that you're doing on a daily basis. From our view coming in, we've got a great seat for that.
We got two questions. One, Jack, this one's sort of tailor-made for you. The other one's a little bit more broad, but it says, I'm a compliance officer on the RIA side, and the firm is owned by a bank after being independently owned. Do you have any advice for a compliance officer and working with audit on the bank side? Well, if anybody knows that, that'd be you, Jack. Maybe Steve knows about it. I don't know.
Well, in all seriousness, Paul, so that individual should work with Megan, work with you to reach out to me. I'm glad to help, right? And to talk offline. And part of this conference is to do those types of things, even virtually, make those relationships. So please make that connection, and Paul can find me, and we'll be glad to make the connection. But it does speak to our ownership structure. And so I've been around investment management for my entire career, and Steve and I have worked together many years, and in various roles that I've had. But it's been in that structure, right? So it's the bank holding company structure that brings in an investment advisor that is in the shop. And so in that environment, it's tough, right? So the bank looks different than the SEC side on the security side, and the OCC, if it's an OCC regulated entity, or the state bank examiners that come in, or the Federal Reserve that comes in, that safety and soundness view is a little different than we're used to on the securities law side and the SEC side. So as far as an answer to the question, I would, again, it's the theme of today, which is really leverage the resources, make sure that you take advantage of that framework and that program. And most likely you'll find that the bank has a framework, the bank has a risk management set of frameworks and policies and procedures, establishes the first line, second line, third line, and they're going to try to find where to put compliance. And if you're used to being a part of the firm, and it's really viewed as a second line function. So there'll be some pull and give and take on that. But really the primary recommendation is not unlike all of it today, which is leverage the resources. And that's something we were just talking about, and that relationship with compliance from audit is really, really important. And so sometimes it's also education. We're all on this call being familiar with the compliance program, or we're familiar with the things that we do from the regulatory space, the SEC space, the laws and rules and regs, and on a daily basis. You may find that, again, the ownership structure in our firms doesn't always understand that, or our parent company firms don't always understand that. So there's probably some opportunity for education. And again, getting them exposed to the program, the framework, the fact that we have a compliance rule that puts us in place for testing, monitoring, governance, oversight. Right? And so really
Go ahead.
Paul. I'll finish.
The next question, you can finish some. whatever you. The next one is for a politician or a diplomat. So I'm going to ask Dan first, and anybody else can weigh in on it. But it says, often I feel like audit folks focus on issues that I do not regard as actual significant risks and largely ignore actual risks. Is there any way to share that message with audit without getting offense-triggering concern?
That sounds like a high-rated audit issue to me right off the bat. But in all seriousness, I think, Paul, I'll share that one. I want to, again, it's interesting to hear Dan's view and Steve's take, but we work really hard at building the relationships in our firms, right? And earning the right to be heard. And that's important. And I know for me that the team understands the significance, the expectation for me and us as a team to make sure if I'm reading the tea leaves on that question, it's one of our business executives that's viewing like, where's the value coming? Because somebody has a checklist that comes in and says, hey, did you use the red pen? And we think it should be a blue pen. So two things. One, I would share those expectations and those risks and help the audit team to evaluate and understand your lens and your filter as to what's significant around the firm, because they want to evaluate those and they should understand them, and you should help them to understand that because you want an independent perspective of if that's happening, if that's functioning, where the risks are. So I'd bring them around the table, help them, educate them and train them in that, share that with them and bring them around for your benefit and help educate that. Again, relationship-driven approach. Steve, I know we've worked together. We've talked about that. Dan, you've seen it. It's important. So relationships are important. And so hopefully with a good relationship, you can have meaningful dialogue. And that's a key cornerstone to any of that. But maybe Steve, share your view on that with folks.
Well, I think it's a great question. And I agree. As an external auditor, I want to hear what you think is a significant risk. But I do just want to make one point. When an external auditor talks about significant risks, we're talking about a risk of material misstatement of a financial statement line item that we're auditing, the numbers, right? So the person who asked the question may be thinking about, a cyber attack or a hack, or maybe they're thinking about a firm reputational issue or a legal type of thing. That's out of scope, right? We're auditors, significant risk is specifically identified in the auditing profession, and it is, what would change the numbers that we're auditing in a material way. But having said that, I would always want to hear your concerns. So, Dan, you want to weigh in?
Yeah, I don't think I can improve on those answers. I would just say that in a public company context, I'm not sure quite what the structure of the company the questioner is asking about here is, but I would regard this as an issue that the audit committee should be paying attention to. Internal audit would normally report to the audit committee, at least as to the substance of their work. Risk assessment is very much a board level concern these days. So I would hope that if this is an issue, it could be considered by the audit committee and they could kind of help redirect what internal audit's thinking was.
Yeah.
Dan experience telling the SEC what to do and not to do. So that takes a pretty good diplomat. So counsel. But anyway, we have a polling question coming up here, and you can vote for that as soon as you see it. But one of the questions is going to be, how familiar are you with SASB and ESG disclosures? Extensive, moderate, somewhat, or none? But we'll learn a little bit more about that afterward. But please go ahead and let us know your opinion on that one. And as we do that, Dan, I think maybe we could start a little bit about the work of the PCAOB.
Oh, okay, sure. I'm interested to see the answer to the polling question.
Oh, we will. As soon as we get it, we'll show it.
Yeah, just quickly, maybe as a bit of a refresher for many people, the PCAOB was created back in 2002, so it's been in operation for about 18 years now, and its basic job is to oversee the auditors of public companies, that is, companies that file audited financial reports with the SEC. In the wake of the Madoff scandal, their responsibilities were broadened somewhat, so now they also oversee the auditors of broker-dealers that file financial reports with the SEC, whether they're part of a public company structure or not. the main thing that the PCAOB devotes its time and effort to is conducting inspections, that is, inspecting the audits of public companies and broker-dealers. And that also kind of leads to the impact that they may have on companies and on particularly internal audit functions at companies, because they issue inspection reports at the end of an inspection, which would describe any deficiency that they found in the audit. And sometimes those bear on the company's financial reporting or internal controls, at least indirectly. Maybe just for clarity for this group, the PCAOB doesn't have any direct authority over the auditors of investment advisors as such. The auditor that conducts a surprise custody exam under the custody rule has to be registered with the PCAOB and inspected by the PCAOB, but the PCAOB doesn't actually have any jurisdiction over that work. It's kind of an odd requirement. And the PCAOB doesn't have any direct authority over internal audit functions at companies or compliance functions, although, again, maybe we'll touch on in a minute, the relationship between internal audit and the external auditor does sometimes come up in inspection reports. The PCAOB reports to the SEC. They're under the SEC's jurisdiction. Everything they do essentially has to be approved by or is appealable to the SEC. And again, maybe from a company perspective, what's important about that is that anything that the PCAOB learns in the course of conducting an inspection then that might bear on a company's financial reporting or suggest that there are errors in a company's financial reporting is likely to find its way to the SEC and produce an issue that has to be resolved with the staff at the SEC. So, I mean, just to kind of summarize how the PCAOB might affect public companies, reporting companies, their inspections could uncover problems, issues in a company's financial reporting because of their focus on the audit of internal controls and the auditor's assessment of controls. Sometimes PCAOB's focus on that affects company procedures and documentation with respect to their controls. They also sometimes uncover independence issues or issues related to communications between the auditor and the audit committee. So there is a potential impact.
We did get those polling questions. You want to put those polling questions back up? Dan wanted to know about them here, and we went over them. And then, so let's see. Familiarity, extensive, 7, moderate, 7%, somewhat, and none, 36.
Well, okay, well, we'll see how much time we have left, but I think one of the things I would say is I would predict that if we ask the same polling question a year from now, people are going to know a lot more about ESG disclosure than they do today, whether they want to or not, because I think it's going to be a priority for the SEC during the coming year.
Okay, I think so.
Yeah, if we go to the,
let's see, are we
you're
fast?
I think we need to back up. If we're going to do all the slides, we need to back up for this one. Yes. Steve, I think you wanted to sort of touch on PCAOB priorities from a firm perspective. And the other thing I'll say at the beginning is, I mean, the points on this slide are worth discussing. The SEC, the PCAOB, like the SEC, is likely to be in transition. While the PCAOB's chair doesn't automatically change with the administration, the SEC does have the ability to change the leadership of the PCAOB. So it's quite possible that their priorities will be changing over the coming year. But Steve, go ahead.
Yeah, thanks, Dan. So the PCAOB is transparent. I mean, they publish their long-term plans, their short and long-term plans. They they record their meetings that they've had as they talk about their priorities. So this is just from information that's publicly available. But the word they use over and over again is they want to be nimble. And not just quicker in getting their reports out. There's something like a 3-year backlog when they look at the public accounting firms. But they know that auditing is changes. I used to review work papers. I now review workflows. A workflow is when you have a bot that pulls data from one thing and ticks and ties it for you, and then gives you a summary, and then you take that summary and you go from there. huge difference from just maybe even 3 to 5 years ago, and certainly more. And the PCAOB knows that, and they know they need to be keeping up with that. So they're very focused on how they can regulate auditors in this new audit environment. It's very different. They're going to be focused on COVID, and did we do enough? Did we challenge management enough? Was that phone stuff I talked about enough to fulfill our responsibilities to their satisfaction? They're going to look at all of the accounting standards, even before COVID. So much has happened: revenue, leasing, CECL is coming online, tax reform, major FASB developments. They would be checking for that. Auditing firms' system of quality controls. So firms like ours and others are now producing a lot of statistics about our quality efforts, how many restatements we've had, how much training do we do, what is our turnover. As part of our overall control environment, we want to be transparent. PCAOB is very interested in that. They want to see firms and how robust the firms are at managing quality, tracking quality, things of that nature. They outreach to shareholders a lot more, the PCAOB, than they used to, and they do a lot more publications than they used to. And if your firm is subject to PCAOB review, more often than not, the PCAOB will want to talk to the audit committee, not to put them on the seat, but to put me on the seat, right? So they're very focused on industry outreach as a regulator, and I think that's important. Enforcement, always a focus. And future standards, like I said, they're very focused on technology. They're focusing on how auditors refer to other auditors and using their work in a number of things. But those are just the highlights from the priorities. It's going to be a more nimble organization if they have their way. And there's a lot of new members on the committee, Dan. So thought the audience would be interested in knowing that.
And to give another shout out for Dan's materials, he has those attached to the materials for this session that takes a closer look at those results that the PCAOB has been finding when it's been doing its examinations.
Yeah, maybe just picking up on that, just quickly, a couple comments. They just issued the most recent round of annual inspection reports on the 6 large firms. Those, reports Steve indicated are publicly available. You can take a look at them. I certainly recommend that people take a look at the report on their auditor, just at kind of a high level. I think one thing to take away is that their emphasis, as it has been for several years now, is on the internal control part of the audit. The auditor has to express an opinion on the effectiveness of the company's internal control over financial reporting. And I would say the great majority of the deficiencies the board identifies in audits have to do with the ICFR component of the audit. The most frequent deficiency cited in those 6 large firm reports is did not perform sufficient testing of the design or operating effectiveness of controls selected for testing. They don't give a tremendous amount of detail about particular problems that they find, but if you look at the reports, one theme is review controls. In other words, a control that operates by someone in management reviewing a report and looking for exceptions or comparing 2 different data sources or something of that nature. Often the PCAOB will find that the auditor didn't focus sufficiently on what that review procedure was and how the person performing it identified exceptions and followed up on them. And again, I think that's kind of a lesson on the company side. I think often the problem has to be cured by the company creating more documentation around its review control procedures. Just quickly, as I guess we've said, they don't identify specific companies in their inspection reports, but they do talk about industries. For companies that they identify as financial institutions, I think the most common deficiency had to do with the auditing of the valuation of investment securities. Obviously, it's a challenging area for both the company and the auditor. And there were a couple of comments for financial institutions also suggesting that the external auditor had placed too much reliance on the work of internal audit, which was kind of interesting in areas that they said were relied so much on judgment and subjectivity that it wasn't appropriate to place reliance on internal audit. I'm not sure there's much internal audit can do about that from its side, but it's kind of interesting that they focus on that relationship between the two. And that, finally, I would just quickly, the other two bullets on this slide are things that I think they'll be touching on in their current inspections. We've certainly already talked about the impact of the pandemic on auditing. I think that will be an inspection focus for them, particularly on how the operation of controls or how controls may have been changed by remote work. And then, again, without going into any detail about it, there's now a requirement that the auditors have in their audit report critical audit matters. They're sort of the hardest things about the audit. I think the PCAOB will be looking at how that was implemented, but on the company side, it's, I think, very important to know what your CAMs are and think about whether those CAMs are things that are inherently difficult about your financial reporting, or whether they suggest areas where you can improve your controls or something about your own procedures to eliminate the CAM. Kind of touched on these things already. I would just urge that you understand what the PCAOB is looking at in inspections, particularly what they found in your inspection if it was inspected. Steve suggested alert your audit committee should be alerted if your engagement is being inspected, because they are very likely to talk to the audit committee chair. And certainly if they find any deficiencies in your audit, you would want to know what they are, both as they shed light on the auditor's work and, again, perhaps on challenges in your financial reporting that can be addressed.
Well, Dan, I know people are excited about, or at least holding their breath maybe, on finding about Sustainability Accounting Standards Board. Tell us what their plans are, what can we expect in the next year, as you just piqued our interest about.
Yeah, the 3-minute version of what SASB is, the Sustainability Accounting Standards Board. SASB's mission is to develop industry-specific disclosure standards to promote or facilitate communication between companies and investors on financially material, environmental, social, and governance topics. That's their mission statement. I mean, we should say at the beginning that SASB is not a government entity. It doesn't have any official authority. The standards that it promulgates are voluntary. Companies can use them or not, but they are becoming fairly widely accepted. There are a number of groups that recommend or propose disclosure frameworks for ESG issues. I think what's unique about SASB or different about SASB is its emphasis is on information that would be material, essentially under the same definition of materiality or a similar definition as that in the securities laws, material to investors in making investment decisions. So SASB isn't trying to create a profile for companies of their impact on society generally or relationship to society or impact on climate just for its own sake, but it's really an investor-focused disclosure scheme. There are...
Dan,
go ahead.
There's a big emphasis in Europe about that and here. Talk to me about the tension between Europe and here versus what investors do. Obviously, somehow that's all got to be addressed somehow, but how does it sort of sort out for SASB?
Well, I guess one thing I'd say is SASB's standards are intended to operate globally. They're not just U.S. focused. So the EU is somewhat ahead of us in requiring sustainability disclosures. SASB's standards could be used for that. I guess the other point I would make is there are a number of different frameworks in this area. There's really a movement now to try and consolidate these frameworks or create a coherent system so that companies don't have to pick and choose between a variety of frameworks that they may not understand very well. I think it's likely that the international accounting standard setters will create their own sustainability standards board, and SASB's work will feed into that. But that should hopefully lead to a global sustainability disclosure standard that all companies can look to regardless of where they're located.
Thank you. That was one of my questions anyway. Thank you for answering that. Anything else on that? Because we are...
Again, that's a very short version of SASB. I guess I would just close by urging people, if you go to SASB's website, sasb.org, look for the financial sector and then the asset management industry within that sector. And you can see what SASB's disclosure standards are for your particular industry. There are 5 of them for asset managers.
Okay, well, I know we want to give each of you an opportunity to say your final words, but Jack, this next poll is sort of, you can tee it up for us because you can make the announcement while people fill out their poll and give you feedback here. Okay, we got somewhat...
folks filling that out. I know we've really picked up on our agenda, Paul, and not a surprise, a lot on our plate, and obviously with Dan and Steve with us today. But so the poll is to try to tee that up. We're glad that some of us are familiar and some are not, but we really, in the materials coming up in the website and a lot of the announcements will be the next meeting of the Audit Directors Working Group. And the key point on that is obviously the date and the time, and March 18th and 3 to 4 p.m. Eastern. But the key point is that Dan and Steve have graciously agreed to be with us to rejoin us and unpack the things that we couldn't get to and that maybe we teased a little bit about. So if you have follow-up questions, if you have things we couldn't get to since we pushed the time, work with Megan, work with Paul, get that in, and then help us drive the agenda for that meeting. We really look forward to having as many people join us and perhaps have a little bit more of an informal discussion and Q&A about some of these topics.
Yeah, that was for members of the IAA. We can't get you in otherwise, but it will be a discussion where you can actually sit there and you can ask these experts a question, more of a dialogue environment. So I think we've exhausted our time, and we haven't exhausted the material, but we've made an excellent down payment on it. And I hope that you all feel like you know more about it than when you walked into, figuratively, the virtual room here. But thank you for joining us today, and thank you, Dan and Steve and Jack, for an excellent presentation. And thank you, audience, for being a great audience and joining us today. And look forward to seeing you again soon. So there's the details of the Auditors Working Group, and we look forward to seeing you at that too if you're able to join us.